Good afternoon, everyone. Thank you for joining us. My name is Paula Dodona. I am the Communications and Outreach Manager for the State Retirement Board. We also have here Zachary Pierce. He is Communications Coordinator at the Retirement Board, and Zachary will be monitoring the questions in the question panel. So if you have questions, you can type them in to the panel box on the right. And when we get to the question slide, Zachary will read off the questions. We also have on the line Sean Brennan from the Smart Plan, and Sean will be giving an overview / review of the Smart Plan. So thank you for joining us. So we'll go through some introduction, update stuff, the eligibility plan rules, the application process, and some important post-retirement matters you should be aware of. The MSRB offices in Boston and Springfield are closed to the public and all staff until further notice. So most staff is working remotely. We do have a handful of people going into the Boston office to pick up the mail and process the mail. So if you have anything that you need to mail to the office, be sure you mail it to the Boston office. This is not affecting the issuance of monthly benefits. The next pension payment will be direct deposited on the last business day of May, which is May 29th. The next MSR board meeting will be held on Thursday, May 28th. Please check the Retirement Board's website if you're looking for updates on our operations and other matters. If you go to mass.gov/retirement, at the top of the page, you will see several alerts. If you're trying to reach specific departments or staff members within the Retirement Board, the top alert says MSRB update and staff contact information. That lists the way to get in touch with us. Voluntary cash incentives. So information has come to our attention that some agencies have unveiled or they're beginning to consider voluntary cash incentives for qualifying employees. Please note that these arrangements typically provide for a one-time cash payment made to an employee with certain service criteria if the employee separates from employment on a given date. These retirement and voluntary cash incentives are not related to the Retirement Board. They do not augment anyone's service for retirement purposes. In other words, they will not add years of service or years to your age under these circumstances. And any incentive payment that you would receive are not included in your base salary retirement calculation. So the payment would be a one-time payment made to you. The only way to know whether or not your agency is offering a cash incentive for folks to retire or to leave, you'd have to contact your individual human resources department to ask. These types of arrangements are causing an increase in requests for retirement benefit estimates. So we do have a queue for benefit retirement estimates. If you wish to get a benefit retirement estimate, we ask that you send an email to srb@tre.state.ma.us and type an email requesting your benefit estimate. Please put that in the subject line of the email that you're seeking a retirement benefit estimate. We will need your full name, either the last 4 digits of your Social Security number, your MSRB ID number, the date that you wish to retire on, and if you're thinking about leaving a lifetime pension benefit, say to a spouse, that would fall under option C. We would need that person's date of birth. Your request will be added to the queue, and you can expect to receive this estimate be mailed to you within 2 to 3 weeks. Your MSRB ID number is unique to the retirement board. When you first started with the retirement board years ago, when from your first contribution, the ID number was created. Any correspondence that you receive from the State Retirement Board has your MSRB ID number listed on the top right-hand corner of the letter. If you save your annual statements that tell you how much money you have as of December 31st, the previous year, if you have those statements, you can look at those, and on the top right-hand corner, it will contain your MSRB ID number. The annual statements, balance statements telling you how much money you had in your account as of December 31st, 2019. We are working on that mailing, and those will be mailed out by the end of June. In some instances, several agencies have introduced variations of hazard pay for their employees due to the COVID pandemic. EOHHS entered into an agreement to provide temporary hazard pay differentials and bonuses to certain employees who provide direct health care services at various facilities, hospitals, and group homes. The type, frequency, and manner of the issuance of hazard pay will determine if it should be considered regular compensation and if it would be pensionable. MSRB staff are in regular communication with the Comptroller's Office to review whether a type of hazard pay should have retirement contributions withheld from it. We are governed by Massachusetts General Law, Chapter 32, overseen by a 5-member board, and it's chaired by State Treasurer Deb Goldberg. We are in a defined benefit plan, so that's the contributions that we contribute over the lifetime of our career out of our pay, bi-weekly pay stub. And it's calculated using the years of service times our age factor times our salary average. The age factor can be found on the back of the pension calculation chart. We will send an email to all attendees after this broadcast. It will contain the pension calculation chart and the presentations for today. So contributions are mandatory for all of us. Depending upon when you are hired, that will dictate what your contribution rate is. People who started working for the state, entered state service between January 1st, 1975 and December 31st, 1983, they're contributing 7%. People hired January 1st, 1984 to June 30th, 1996, they're contributing 8%. Anyone hired on or after July 1st, 1996 are contributing 9%. State police, effective as of July 1st, 1996, they all contribute a base 12%. Those of us non-state police, once our salary reaches $30,000, we then contribute an additional 2% into our retirement annuity savings account. Contributions are not managed by the State Retirement Board. They are managed and invested by the Pension Reserve Investment Management Board, which is also PRIM. If you have any questions about the pension fund and how the money is being managed and how the accounts are doing, you can go to their website, mapension.com, or you can contact them direct and they will be able to provide you with information. So creditable service, if you work full-time as a state employee, that means, and you are contributing to your retirement annuity account, so that means that you would see on each pay stub a contribution went into your retirement account. It takes 10 years of working full-time to become eligible to collect a state pension. If you're off the books for a medical leave or on workman's comp, any service that you're off the books and you're not working and you're not contributing to your annuity fund would not be accruing creditable service. If you work on a part-time basis, say hypothetically you work part-time, you work 6 months a year, that would take you hypothetically 20 years of state service to become vested or eligible to collect a state pension, versus those of us that work full-time, it would take us 10 years as long as we didn't have any breaks in service. There was a court case, Madden versus Crabb, an elementary school teacher. Miss Madden went to retire, and when she went to retire, she found out she had a lot less creditable service accrued than what she thought, and she researched it and found out that because the elementary school closed during the months of July and August, they considered her and reported her over her career as a part-time employee at 80% instead of a full-time employee at 100%. So she appealed this and fought it, and she won, so that she was, given back creditable service for the time that she was designated as a part-time employee. So what this means for you and I is if you worked any public service before January 28, 1993, that service might be credited to you as full-time basis. So if you worked as a part-time lifeguard or something like that, worked for your local city, town, municipality, or even if you had a state job, as long as you didn't take a refund, or if you took a refund and paid it back, any part-time service you worked on or before January 28, 1993 may be awarded to you as full-time creditable service. Creditable service purchases, also buybacks. In some instances, you may have purchased or entered into agreement to purchase prior service. You would have to be an active member in service at the time of your application, and you would have to complete and submit the buyback form to the retirement board. If you're in the midst of a buyback agreement, paying it back, you would need to pay back all the money if you want to earn creditable service for all that time. It doesn't mean that you can't retire now if you're in the middle of a buyback. It just means that you will only receive creditable service for the portion of the buyback that you have paid for up until your chosen retirement date. Any creditable service that you were trying to buy back and you have not yet paid for, you would not receive creditable service. Typical types of buybacks or service purchases were refunded prior service. You quit your state job, you liquidated your account, and then you came back and wanted to do a buyback. Service to another public retirement system, if you worked for a city or a town or a municipality and took a refund at that time, and then you got a state job, you might be able to complete a buyback form to find out if that service that you refunded from a city or a town is eligible for you to buy back that time, so it can be added to your creditable service. In some cases, out-of-state teaching may be eligible, and contract service, if you worked for the state as a contract employee and then were hired as a full-time state employee, you must work a full 10 years and become eligible to collect a state pension. Then you can submit a contract service buyback form to request to purchase up to 4 years of the contract service that you had worked prior to being onboarded as a full-time state employee. Veteran service, if you have veteran service, you may be eligible to purchase up to 4 years of that time. You have to qualify as a veteran as defined by Mass General Law, Chapter 32, Section 1. This is listed on the veteran buyback form. So if you download that, all forms are posted on our website. If you go to mass.gov/retirement and scroll down to the all forms page, the buyback forms are posted there and you can download what you need. Veterans who have active reserve or Mass National Guard service may be eligible to purchase up to 1 year of creditable service for 5 years of National Guard service or reserves. So if you're planning to retire within the next 3 months and you have a pending buyback application, please notify the buyback team. Let them know that you submitted a buyback application and you're planning to retire within the next 3 months. Could they please take a look at that to let you know if the service is eligible to purchase. Payments received for current buybacks being made via personal checks will be processed when feasible. Again, we are receiving all mail to our office and it is being processed, but it may take a little longer than usual. We appreciate everyone's patience while we continue to review and process the current backlog of buyback requests. The best way to communicate directly with the buyback department team is they have an email, which they all can see. It's buyback@tre.state.ma.us. When you send an email to the buyback team, it's helpful to put your name in the subject line and what your inquiry is, if you're, need a status update on an existing buyback, if you have an issue with a payment, and then just put everything in the email and someone from the buyback team will get back to you. There are 4 types of retirement: superannuation, which is an antiquated name for the regular retirement, accidental disability, ordinary disability, and a termination allowance, also known as a Section 10. Section 10 termination allowance is only eligible for those of us hired on or before April 2nd, 2012. And that's due to pension reform that occurred on April 2nd, 2012. So eligibility to retire. So we're assuming everyone here is nearing retirement. So we were all hired before April 2nd, 2012. We must be at least age 55 with a minimum of 10 years of creditable service, or we can be any age with a minimum of 20 years of creditable service. Our pension is calculated using the average of our 3 highest consecutive salary years. That is base salary. It does not include overtime, and it does not include any per diem pay unless you are in a union and the union negotiated that pay would be included as part of the union contract. So if you have questions about that, you'd have to ask your human resources department or check in with your union steward. for those types of questions. I'll take a quick stop here to see if we have any questions that need to be answered thus far.
We have a couple that came in. One is from Patricia. It says, this is for the advisors. What are you seeing in portfolios? Are folks going to cash, and is this a mistake? I'm not sure if this might be more of a question to Sean, so maybe later Sean can address it. I'm not exactly sure what Patricia's.
Is there, yeah, I don't know. This is for the advisors. Oh, portfolios. So Patricia, you would have to wait, and Sean, you can ask Sean that question when he presents about the SMART plan. If you're speaking about the pension benefit, the state pension fund, you would have to reach out to mapension.org. They're the ones that handle that.
The next one, is there any indication that an ERIP that adds years to service or age will be offered before the end of fiscal year?
Patricia, I think I covered that at the beginning of the webinar. There is no, we have not heard any word, and most agencies now are offering just a cash incentive, and the individual agencies are doing that themselves. They would not add any years of service or age. The legislature would do an ERIP, so that would be the governor's office. So you may want to call or email the governor's constituent office, or you can call your local state rep or senator to ask them if there's any talk of a legislative ERIP down the road. But as far as we know right now, we're only hearing about cash incentives.
If on a long-term disability and you do not contribute to the pension fund, and it does not count as credible service, correct?
So if you're long-term disability, so if there is no contributions coming out of your long-term disability going into the pension fund, you are correct. You are not adding creditable service.
What exactly is Section 10?
I will get to that in a few moments.
Can you please repeat the email address to request an estimate?
srb@state.ma.us. Did I forget the TRE? srb@tre.state.ma.us.
I just typed that in as well, so people should have received that.
Okay, perfect.
If we two questions related to furloughs. One is, if we go on furlough and that lowers our annual income, will that lower our last 3 years of consecutive salary? If so, is there any workaround?
Okay, so Marvin, if you go out on furlough, that means you're laid off, and it means that you're correct. You would begin collecting unemployment. You would not be adding to your creditable service. So you wouldn't have a salary. Your salary would be right up until the last day that you're on payroll. And then when you switch over to unemployment, that they're two entirely separate things. So they would look at the 3 years highest consecutive salary, so that, you know, if your salary has been during the last 36 consecutive months, it would only go to your last day on payroll.
And it looks like that's the same question that Jerome was asking too. So I'll jump to the last one we have here is shift differential calculation in the pension.
So what's the specific question?
I think
is shift differential calculation in pension? Again, Arthur, that depends upon your union, if you're in a union, or the terms of the pension. So you would have to check with your HR office first, or if you're in a union, you can check with your union steward and they would be able to tell you about shift differential.
Let's see. Who do I contact to find out on what month year I've reached 80%?
So you can do that yourself, Carla, or you can send us an email. We can let you know, we can take a look at it with you, what your creditable service is. So hang on, because I think we might get to that in a moment.
Let's see. How does a one-time 9-month FMLA period of 30 hours a week constitute a break in service?
Yes, if you're out on FMLA and you're either on a non-paid FMLA, definitely if you're on a non-paid FMLA, you would not be adding to your creditable service because you're not making biweekly contributions into your retirement account. So I'm going to, Iris is asking why her question wasn't answered. I apologize, Iris. Do we have the names of the agencies that will be involved in these cash incentives? We only have the names of some state colleges that have reached out to us for assistance. So we do not track it or keep a comprehensive list of these organizations, no.
And then the last question I see here, if furloughed for 10 days over the course of the year, does that affect salary for retirement purposes?
Yes, if you're furloughed and you're not earning a paycheck and there's no money being contributed, there's no retirement contribution going into your retirement account, you can't earn creditable service.
I missed one from Michael. Sorry about that. What happens to flex spending healthcare funds that have been contributed?
Okay. I'm sorry, what was that?
What happens to flex spending healthcare funds that have been contributed?
I'm not sure. That would be a group insurance commission question, or you would have to contact Benefit Strategies to ask them. I myself am in Benefit Strategies. I have the health account, and it's my understanding that if we don't spend all the money in that account by June 30th, we lose it. So you have to spend it or you lose it. So I know myself, I'm looking now, I have like $300 that I need to spend before June 30th. But Group Insurance Commission, they are a separate agency. We have invited them to join us on these webinars. Unfortunately, they don't have the staff to be able to do that. So we do the best we can with answering questions for them, but you need to check with Group Insurance Commission.
If you retire and your agency hires you back as a contract employee, do you keep adding to your years service/age?
No, once you retire, you're retired, and then when you get hired back as a contract employee, you would fall under the 960 hours. You would have to make sure that you don't earn money under the 960 hours, which I'm going to explain in a few minutes. All right, so I'm going to move on. We want to try to keep it moving so that I give Sean ample time to present his. So the typical retirement calculation is based on our age as of our last birthday. The age factor maxes out at age 65, which means you can keep working until you're 70, But if you do that, when you come in and apply for retirement, your retirement calculation will be calculated as if you're age 65. The formula also includes our length of creditable service, our group classification designation, and our highest 36 consecutive months salary of regular compensation, and that's the base salary, does not include differential and overtime unless differential is approved by a union. The allowance may not exceed 80% of our 3-year highest average rate of regular compensation. If you qualify for a veteran's premium, you could earn an additional $15 per year of state service up to 20 years. So if you have 20 years of veteran service, you could get an additional $300 per year added to your salary. So group classification, group 1 are general office employees. You work in a general office. In elected officials. Group 2 are members that include probation officers, certain correction officers, and folks in Group 2, their major duties require them to have direct care, custody, instruction or supervision over folks such as prisoners, or persons with mental illness or developmental disabilities. So folks who work in group homes or prisons. Group 3 is limited to state police officers, and Group 4 members include certain public safety officers and officials such as police officers, firefighters, and correction officers working in the state prisons. Group 2 and Group 4 classification are subject to board approval. Just because you work in a Group 2 or a Group 4 position doesn't mean that you're automatically granted that classification when you retire. You must submit a group classification application within 6 months of your retirement date to get it reviewed by the group classification team, and then it goes before the board. So the retirement board meets once a month, usually the last Thursday of the month, and 1/3 or more of the agenda is usually reviewing and making decisions on group classification applications. For those of us hired before the pension reform, April 2nd, 2012, if you're working in a Group 2 or Group 4 position for a full 12 months preceding your retirement date, you can request that all of your prior service be classified as a Group 2 or a Group 4. Upon review, if it is approved, you would be notified after the board meeting via a written letter in the mail letting you know. And if it's approved, if you get approved for Group 2 classification, it would add 5 years to your age. So if you're age 55, you're approved for a Group 2 classification, your age would be calculated as if you are age 60 instead of age 55 when you go to retire. Those of you who are approved for Group 4, we usually see the corrections officers in the state prisons. If they're approved, they can have 10 years added to their age. So they could hypothetically retire at age 45. If approved for Group 4, their pension would be calculated as if they were age 55. So again, you must fill out the group application. So if anyone listening in is planning to retire within the next 6 months and you do work in a Group 2 or 4 position that you want classified, you must fill out a group classification application, your employer does need to fill out a part of the form and then mail it into our Boston office. So those of us who entered service before April 2nd, 2012, we can choose whether or not to have our benefits prorated, but it's not mandatory. So that just means if you've worked 10 years as a Group 1 office employee and then you work 10 years as a Group 2, if, again, you work the 12 months leading up to your retirement date in a Group 2 position, you could ask that all of your service be calculated as Group 2, even the first 10 years you worked as a Group 1. However, if you worked the Group 2 the first 10 years and you're working a Group 1 position when you retire, you would then want to have the first 10 years of service prorated as a Group 2. The second 10 years would be rated as a regular Group 1, which means age 55, and then the calculations are done and blended together to get your annual pension. So here's an example. Patricia is 55, member of Group 1. She has 20 years of creditable service. Her salary average is $55,000 a year. She's just seeking a regular retirement. So if you look at the formula at the bottom of the slide, we take her 20 years of service and multiply it by the age factor. So for age 55, the age factor is 0.015. You can find these age factors listed on the back of the pension calculation chart, which we will email to everyone, or it's in the book, the retirement benefit guide. They're all listed in there as well. And when you multiply those together, it tells us that Patricia is eligible for 30% retirement of her $55,000 annual salary. So 30% times $55,000, Patricia's eligible for an annual pension of $16,500. That is the gross amount. That is before federal taxes are withheld, and that is before the group insurance, health insurance premiums are deducted if you do subscribe to group health insurance. Patricia is approved for Group 2. So she's the same, Ava, excuse me. Ava is approved for Group 2. She's the same age as Patricia, has the same years of service and the same salary average. But because Ava is approved for Group 2, when we calculate her pension, her age is going to be raised by 5 years. So her pension is going to be calculated as if she is age 60. And you can see at the bottom of the slide, the age factor for age 60 is 0.020. So we multiply that times her 20 years of service. It gives us the number of 40%. So Ava is eligible for an annual pension, 40% of her $55,000 highest salary average. So when you multiply that out, that comes out $22,000 is her gross annual pension. And Ava also qualifies for the veterans premium for 20 years, so that's an additional $300. So Ava's total estimated pension is $22,300. And again, that's the gross amount before federal taxes are taken out. We do not pay state tax if we retire in the state of Massachusetts. So with that, I'll pause for some additional questions.
Let's see. Are district attorneys Group 2 or Group 4?
District attorney, I'm not sure.
Sorry, assistant district attorney.
Assistant district attorney, you would need to check with your human resources department. They should be able, you can get a job description and you can ask them
So Robert asks, to be sure I heard this right, if I retire at 70, my age will be capped at 65?
Yes, that is correct.
Another question, general employees would include working in a state agency, an institution of higher education?
Correct.
Daniel is curious how the 0.020 age factor is calculated.
So the numbers, it's a chart they use. It's been around forever. They use the actuarial age tables. They came up with them, but it's all legislated under Chapter 32 law. So if you look at the group at the pension chart that we mail out, you will see the set age factors for each age that you can punch that in.
All right, I think that's the last question as of right now.
Okay. So accidental disability is employment related. The calculations would be based on what your salary was on the date of your injury. It would be 72%. Or it's calculated using your last 12 months working salary average plus your annuity. This pension is not federally taxable. Ordinary disability is non-employment related, and it's for those folks who are not yet age 55, so they're not eligible to retire due to their age. But if you do have 10 years, the minimum 10 years full-time creditable service, if you're approved for an ordinary disability, you would be able to retire. They would raise your age to age 55 and calculate it under a regular retirement benefit. And this ordinary disability would be, God forbid, you get sick with an illness and you're no longer able to work. So you need to retire. An ordinary disability may be an option for you. Accidental or ordinary disability retirements do require a lengthy approval process. You would have to be examined by independent physicians, usually a joint panel or 3 individual doctor visits. These doctors write up their recommendations and submit them to the board as to whether or not they recommend you for the accidental or ordinary disability. Then your case would come before the board, and sometimes the cases are then sent before PERAC, which is the state agency that oversees all the public retirement systems in Massachusetts. Current disability applicants, so if someone has submitted a disability application, PERAC had stopped entirely with the medical panel reviews because everything is closed due to the pandemic. Recently, they started to open up a little bit by doing examinations through a records review or teleconferencing. If you agree to have your disability case reviewed that way, you could let PERAC know that you're willing to do that, and everyone involved would have to sign a waiver indicating that they consent to this alternative process. This accommodation would allow your examination, your medical examinations to go forward. If you are being scheduled and you consent to the alternate review, PERAC would reach out to you to schedule it. If you have any questions regarding this process, you want to reach out to Kate Hogan at PERAC, and it's khogan@per.state.ma.us. And just as an FYI, the disability unit at the retirement board is continuing to review incoming disability applications, and if they meet the required criteria, the retirement board staff will request that the medical panel review be done, so we can try to reduce any delays as PARAC is resuming their medical panel examinations. So a termination retirement allowance is a Section 10, and this is for folks with 20 years or more of full-time creditable service who have been involuntarily terminated or furloughed at any age. Those of you that have 30 years or more of full-time creditable service, regardless of the separation, you may qualify for termination allowance, but you must be under the age of 55. The termination allowance is calculated a little bit differently than a regular retirement allowance. So depending upon if you are in this situation, your employer notifies you that you are being let go because your position has been abolished or for whatever reason, and they offer you to retire, you could contact the retirement board to find out what the difference would be between a termination retirement allowance and a regular retirement allowance. Usually the termination retirement allowance, it's calculated using 1/3 of your 3-year highest salary average plus the annuity in your account, the funds in your account. So the percentage that you would be eligible for, the pension percentage would be between 42 and 48% under a termination allowance. So if at the time that you're leaving your job, you know, a termination allowance would give you a slightly higher retirement pension than if we calculated it under a regular retirement allowance, you may want to apply for termination allowance. Please note, if you accept any cash incentive to retire, it automatically disqualifies you for receiving a Section 10 retirement allowance. So you want to be really careful if you accept an incentive. That is a question right on the form. You would not be eligible for an allowance. But again, when the time comes, you can speak to a retirement counselor at the State Retirement Board, and they will look at your individual situation and assist you with your questions. So we'll stop for a moment here to look at questions.
Let's see. For option C, does the percentage change as we age? Is it set permanently at the age of retirement?
So your option C benefit, whatever you get on the day that you retire. You're locked in. So you're, no matter what your pension allowance is, if you choose A, B, or C, as soon as you retire, that amount never changes.
Do people ever leave state service but then wait several years before applying to draw your retirement to increase the age factor?
Yes, that's very common. So as long as you entered into service before April 2nd, 2012, and you have a minimum of 10 years of service so that, you know, you're eligible or vested, you could leave and then you could start collecting your pension at age 65, and you would have the maximum age factor with 10 years of service.
If you are eligible for Group 2 and request a quote on your retirement amount, is it automatically sent at the Group 2 amount?
I'm not sure, to be honest with you. You would have to, you might, when you request your benefit estimate, that would be a good thing to include in your brief request. Just let them know that you were approved for group classification and ask that it be estimated as if you were the higher age. And we do have a pension estimate calculator on our website that you can go and you can use that. You can, you know, increase your age by 5 years. It gives you a pretty good estimate.
Can I request 2 estimates, one for this year, one for next?
Again, you can, but it will be placed into the queue. We do have quite the list of folks requesting pension benefit estimates.
Ordinary or accidental disability is not through GIC insurance that we have the option to purchase, correct?
Correct. An ordinary or accidental disability is a pension that you would apply for through the State Retirement Board.
How do you calculate spouse age factor 8% to 15%? Example, the wife is 2 years older, what the percentage would be?
I will explain that at a very high level in a couple of slides.
Is there any advantage to retiring after the fiscal year changes, like increase in salary, or until after the hiring anniversary date?
Again, you'd have to speak to a retirement counselor about your individual situation. Your higher date would, you know, that would be years of service, and then your age keeps going up each year. So you can talk to a retirement counselor.
You indicated the benefit doesn't change, but do retirees receive a cost of living adjustment?
We'll go over that in a few slides.
How soon before you retire do you need to complete the paperwork, and why would you receive when would you receive your first retirement check?
Okay, so we're getting ahead of ourselves. So I think what I'm going to do in the interest of time is I'm going to hold off on questions and continue with till the end of the presentation, because I think your questions will be answered. All right, so the application process, regular mail delivery is being picked up at our office. We strongly encourage everyone to continue mailing paper documents to the MSRB's Boston office. If your request is not time sensitive, it would be great if you could defer to submitting it to a later date. You are not required to also email a document that you have already mailed. Emailing and mailing documents may result in unnecessary duplication, and it's slowing down the processing of transactions. If you do mail it, make sure you make a hard copy of it for yourself, and just so that you have it, and maybe jot down the date that you mailed it. We will honor the postmark date as the date of receipt. The retirement application, you can fill it out 120 days before your retirement date or 60 days after your last day on payroll. If you file more than 60 days after your last day on payroll, your effective retirement date will be designated as the 15th day after the day that we received it in our office. You can withdraw your retirement application at any time up until the day that you chose to retire. Once that day passes, you cannot make any changes to your retirement. So for that reason, we do not begin processing your retirement application until the day after you've retired. So if you're planning to retire on September 1st and you mail us your retirement application, say June 1st, we will scan it in and we'll send you a written confirmation that we received it, but you can withdraw it at any time. So for that reason, we would not begin processing your September 1st retirement date until September 2nd. The application has an option witness form that must be signed. If you're married, your spouse must sign that witness form. If you're not married, you can have anyone sign it. There is a W-4 federal tax withholding form. You need to let us know how much federal with tax withholdings you want, if any. There's a direct deposit form that must be filled out. Direct deposit is mandatory. Retirees get paid once a month, and it's on the last business day of each month. Their pension payment gets deposited into their account. There's also an authorization for filing information electronically in there. So if after you retire, you want to be able to send us an email to update your address, you could complete that form. And then depending upon your situation, you would submit just copy of birth certificate, marriage certificate, DD 214, depending on your individual situation. So there's 3 options that you will have to choose from when you elect to retire. Option A, there would be no survivor benefits. It would provide you with the maximum benefit that you're eligible for. It's factored as of your last birthday, and all benefits would cease upon your death. And then depending upon what day of the month you passed away, either survivor would have to pay back the retirement board, or the retirement board would have to issue a payment and to be able to close out your account. Option B protects the money, the cash in your annuity account. It just makes it last longer. So there would be a 1 to 5% reduction in your monthly pension benefit to make the cash in your account last longer. And again, it's factored as of your last birthday. With option B, you can choose as many beneficiaries as you want, and they don't have to be related to you. And when you retire, fill out your retirement application, you can list your beneficiaries. And then after you retire, you can change your option B beneficiaries at any time. You'll want to note, though, that the option B pays a lump sum payout to your beneficiaries. So however much cash is left in your annuity account upon your passing, that would be paid out in a lump sum payment as you directed on your beneficiary form. Note that if you've been retired more than 10 years or so, usually there is a zero balance in your annuity account. That's because our monthly pension payment is made up of 2 parts. It's made up of the money that we contributed over the lifetime of our career, and then the other part is kicked in from the Massachusetts State Pension Fund. So each month in retirement, when we collect a pension payment, they're drawing down our annuity account. Option C is the only joint survivor allowance option. It's the only option where you can elect to designate a beneficiary to receive a pension, which would be 2/3 of the pension that you were receiving upon your passing. Depending upon the age of the beneficiary, there would be usually it's typically somewhere between 7 and 15% reduction in your monthly pension payment, because that money has to be set aside to pay your beneficiary upon your passing. The closer in age you are to your spouse, the less the reduction, because it's all based on the actuarial tables. So if you married someone that's 20 years younger than you, they have a much longer lifespan than you do. So the reduction in your monthly benefit is going to be closer to the 15% side, because your beneficiary has a much longer lifespan. So more money has to be set aside to be able to pay them a lifetime pension benefit upon your passing. If your beneficiary predeceases you, you would notify the board and submit a copy of their death certificate. As soon as we receive the copy of the death certificate, your benefit will be bumped from option C up to the maximum amount, the benefit, the option A. You cannot change your option C beneficiary no matter what after your retirement date has passed. So if your option C beneficiary predeceases you, you can't select another beneficiary, because we used the option C beneficiary date of birth to calculate both of your pensions. If you retire and you and your spouse get divorced, it doesn't matter. That ex-spouse will still get your pension benefit because we used their date of birth to calculate your pension. Post-retirement matters. Usually there is a cost of living adjustment and the retirement board has nothing to do with it. This is all a line item in the governor's annual budget, and all your representative, your senators, the three of them submit an annual fiscal budget, and in each budget contains a line item for the COLA. The last 8 or 9 years has been the same line item. It provides a 3% increase on the first $13,000 of a retiree's pension. So current retirees that were eligible for the COLA, they got $32.50 a month for a maximum of $390 a year. And this has been the same for the last 9 years. Retirees will be eligible for a COLA on July 1st of the second fiscal year following the year in which they first took their retirement benefit. Each year thereafter, if a COLA is approved by the legislature. So it all depends upon whether or not it gets approved in the pension, in the annual budget. So if Governor Baker approves a pension COLA increase for the new budget, folks who retire by June 30th would be eligible for a COLA July 1st, 2021. Taxes on your pension, if you retire in Massachusetts or New Hampshire or 14 other states, you won't pay any state taxes on your pension. The pension is federally taxable. If you move abroad or to another state that's not listed on this slide, you want to check with your financial advisor or your tax advisor to find out how the tax laws where you're moving to will impact your pension. So you want to let your beneficiaries know, your survivors know what to do upon your death, upon your passing. They need to contact the state retirement board immediately to stop that direct deposit of the pension benefit into your account. They need to provide a copy of your death certificate, and once we receive that, we will be able to close out your account. They will need to contact the Group Insurance Commission separately because they are a different agency. You will be eligible to work after retirement, but there is a limit. You can only work up to 960 hours per calendar year, or your earnings can be the difference between your retirement allowance and the current salary of the position from which you retired. After you've been retired for one full calendar year, you may earn an additional $15,000 beyond the limit. But again, if you reach the 960 hours first, you have to stop working, or if you reach the salary cap first, you have to stop working. If not, you might have to pay back money to the retirement board. Under the COVID pandemic, Governor signed a changes being made where there's a temporary lifting of the retiree earning limit. So for retirees who are working during the pandemic, their hours in earning limit cap has been lifted. For those who continue to work after retirement, if you want to return to state service, you can send a letter in writing to the retirement board to either waive your retirement allowance under Section 91 or to be reinstated to active service under Section 105. But there are conditions that must be met to do these, including you'd have to pay back all the retirement benefits you've received thus far, and you'd have to work an additional 5 years after reinstatement to service before you could reapply to retire. If you're working in the private sector, if you're collecting a regular superannuation retirement benefit, you can earn unlimited earnings in the private sector. However, if you go out on a disability retirement, either ordinary or accidental, you may be limited to working in retirement, even in the private sector. Group Insurance Commission, wish they could be here with us, but they don't have the staff that's able to participate in these webinars. Their current premium is 20% for retirees. If you need to contact them direct, you can call them at the number 617-727-2310. Group insurance, when you retire, they will direct bill the premium until your second pension payment is direct deposited, because insurance premiums are paid a month in advance. If you pass away, regardless of what option you chose, A, B, or C, at retirement, your spouse can continue GIC health insurance, which is currently at a 10% premium rate, provided they don't remarry. Collecting Social Security benefits do not impact your state retirement benefit. However, your Social Security benefit might be offset due to the windfall elimination provision. So if you are eligible to collect a Social Security pension, once you start collecting your Massachusetts state pension, you will, your Social Security pension may be offset. And you can contact your local Social Security office to assist you to determine how much your Social Security benefit may be offset. You can create your own My Social Security account. They have the calculator in there where you could calculate it yourself. All questions related to Social Security should be directed to Social Security. Board staff are not authorized, to provide you detailed counsel on Social Security matters. When you retire, your vacation and sick pay is handled by your department, the agency from where you're retiring. That money is not sent to the retirement board, so it's not factored into your pension payment. You may be able to defer that into the SMART plan. We'll let Sean talk a bit about that. We are very active on social media and our website. We have all the forms and everything. So you can go to mass.gov/retirement. If you look at the events page, you can see the calendar for upcoming webinars. We're very active on Facebook. We have a weekly live coffee or tea with MSRB live streaming where you can join us and ask your pension related questions there. So our main office, as we said, is closed, and our Springfield office is currently closed, but you can send all your questions to MSRB communications at tre.state.ma.us. We will try to answer your question. If we can't, we'll make sure we get it to the folks that can answer it. You can call our telephone number, or you can send an email listed to the directed departments for a quicker response. And if you go to our website, mass.gov/retirement, at the top of the page, you'll see staff contact list. If you click on that, you'll see all this information provided there. So with that, I kind of ran way over, and I apologize for that. What we'll do is we will, I'm going to turn it over to Sean now, but we can download all the questions that were asked, and Zachary and I will make sure that we will follow up individually with each of you that asked a question that we did not get to. So with that, I thank you everyone for being here. And at this point, I'm going to turn it over to Sean.